Hello, welcome to another session. Please try your best to read this particular disclaimer. Okay, so all right. So today we are going to look at liquidity build up. Okay, so and then maybe at the end of this particular session, you should be able to understand this what liquidity build up is and how to profit or take advantage of it. Okay, so liquidity build up is a situation where price fails to hit a point of interest. So in this situation, we are looking at a point of interest. Price comes close to it but fails to what, touch it, at least to the open. Okay, so this is supposed to be open to the open of the candle after several attempts. Okay, so creating a liquidity pool around it. So we have a point of interest or an order block, a supply or a demand zone, or whatever kind of point of interest you think of. Okay, price comes close to it on a first attempt, fails to touch it. Okay, that is the open of the candle. Price fails to reach the open of the candle and then comes back again, and then another attempt, maybe on a second attempt, fails, third attempt fails, so on several attempts, but it is considered liquidity build up even at one attempt. Okay, so as we go on, you'll understand. Okay, so usually the market will trade through that liquidity, okay, and hit the point of interest before moving to the intended direction. Okay, and so liquidity build up is an easy concept. So let's look at the chart. So for instance, we have the market moving to the downside. Okay, and then we assume that this is a demand zone or another block. So this is another block or a demand zone. Right now, price comes back, first attempt. Okay, so we have a first time back, fails to hit this demand zone, second time, and a third time. Okay, so here we have liquidity. Here liquidity has been built around this demand zone. Okay, so now price will trade into the demand zone. Okay, and then at least we know it is going to trade above this point. Okay, so we built up liquidity. Okay, so first of all, people decided to buy here. Okay, yes, it came back another time, another group of people decided to buy, and people were still buying here. Okay, so their orders was used as liquidity, okay, into this particular zone before price moved up. Okay, so next, let's assume this is also a supply zone. Okay, first attempt to reach the supply zone failed. Okay, so there was a first attempt to reach the supply zone. Okay, so again, liquidity has been built here. So we have LB liquidity build up. Okay, liquidity has been built up around here. Okay, so now we came a second time, a third time. Okay, then we hit the point of interest before trading to the downside. Okay, so let's look at some chart. Okay, so this is British pounds, CHF. Okay, so now here, okay, so we have this supply zone. Okay, and then we have this demand zone. Okay, this supply zone is a very strong one because of the magnitude or the strength with which price moves away from this particular zone. So you have a very strong supply zone here, okay, and a very strong demand zone here, okay, due to the fact that price move with strength. So we left here with strength. Okay, but now here price attempted to reach this supply zone once, it failed. Yes, it traded above this, okay, but still failed to reach this supply zone. Still failed to reach the supply zone. So first attempt, second attempt, and then on the third attempt So with this, you place your order around this candle, maybe your stop loss above here. Okay, so we failed the first time, second time, and the third time we traded inside this. Okay, we hit the open of the candle, and then boom, we had this strong move to the downside. Here too, okay, there was a first attempt to come back here, which failed, a second attempt to come, which failed. Okay, so we have something like this, and a third attempt which failed to reach this supply zone. Then we saw price trade into it, to the supply zone, sorry, into the demand zone. Okay, so this is a demand zone, into the demand zone, and then we had a strong move to the upside. Okay, so this is how we look at the liquidity build up. Okay, so the liquidity build up in this particular instance, okay, we're looking at this candle, the last bullish candle here. Here we're looking at the last bearish candle. Okay, this particular one, right? So that is where you place your orders. Okay, so this is good. Okay, so this is not a supply zone that I would prefer trading. This candle is not something I would prefer trading. That's the last sell candle here. Okay, but due to the numerous attempts to reach this, 1, 2, 3, okay, all these are attempts to reach this particular candle that failed. Okay, this means that liquidity has been built around this this candle. Okay, this demand zone, liquidity has been built around this demand zone. Okay, therefore price trades into the zone and then we move up. Okay, so on several attempts to reach it, so for instance here, this is a zone, sorry, okay, this is a very good zone, right? An attempt to reach it failed. Okay, so this is 1, 2 attempt to reach it failed, and then price traded into it, and then we had a move. Okay, so now we can see this. Okay, this was mitigated, this area was mitigated, but we can go to a lower time frame and find what a supply zone here that has not been touched, and all this becomes what liquidity around it. And so if price comes back in, we would like to take our trade around that zone. Okay, so I think those are the only charts example that I look. So I'll take you to the chart and then we look at some examples. So for instance here, this is USD ZAR. Okay, so now with USD ZAR here, this particular candle here, this last sell candle, okay, price came close to it, but we failed to touch that open. Okay, so we had the first move, one attempt. Okay, so price traded into it and then boom. Okay, so that is it, and I believe that the liquidity was built around this area. But if you go to a lower time frame, this is a weekly chart, you are going to see that there's a supply zone around this area that failed to be what mitigated. Okay, so price came around 50% of this week. Okay, okay, so price came around 50% of the week, right after liquidity was built up around this area. Okay, anyway, so now on another attempt, okay, we had this same supply zone here. Let me delete this one, this demand zone, sorry, we had this demand zone around this area. Okay, price came once, so we have 1, 2, third attempt, fourth attempt, and price failed to reach this particular one. So now we came back use all this as liquidity, and then boom, trade it above this. Okay, so you can see that there's still liquidity build up around this area. Price has failed to touch this, so you can extend this like this. So okay, since price has failed here, let's wait for to see price take this liquidity and then we join it to the upside. So another example will be on Euro and ZD. Okay, Euro and ZD. Okay, so Euro and ZD, I'll use the daily and the 4-hour chart. So for instance here, okay, we had this strong move to the upside. Okay, so we have a demand zone here. This candle was a demand zone. Okay, so now this is the open of that candle. Price came, okay, price had a first attempt to touch it. So if I go to the 4-hour, you see it clearly. Go to the 4-hour chart, you see it clearly. So this is a zone we marked on the daily chart. Okay, price came once, twice, 3 times, 4 times. Okay, and then created a liquidity pool around the zone. The liquidity pool around the zone. Okay. So we had a liquidity pool around this area. So what price did was to trade inside this liquidity pool. Okay, inside this liquidity pool, and then boom, we went up. So now you can see that here too. I don't know if you touched it. Okay. 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 Okay, so on the 4-hour again, yes, there was a build up around it. There was a build up around this area, 1, 2, 3. Okay, all this build up, and then price traded into it. Okay, so let me use this line. Okay, so we have this. Okay, so fail to touch, one, twice, building liquidity around this area. Okay, so this area, price came back here to mitigate the zone, and then we had a strong move to the upside. Okay, and then when you go back to the left, I think we are going to find the same thing here. Liquidity being built up around this area. Okay, around the top here. Okay, so let's use the daily chart and see. Okay. Okay, so you can see that this is a candle, right? This is the candle. First attempt to touch the open failed. Okay, second attempt, and several attempts were made to reach this particular candle here. Okay, so price now traded above all those and then give us this strong move, okay, to the downside. Okay, and it happens on every time frame. You can find them on lower time frame or higher time frame. Okay, so when you get them on higher time frame, it's it's a plus for you. Okay, so this is it. Right, the next one we are going to look at GBP again. I think. Okay, so for instance here, for our chart, So now, how is the 4-hour or 1-hour chart? Okay, so here, once this area hasn't been mitigated yet, okay, so I wanted to show you an example of how I'll do it. So for instance, if you look at this, we have a drop, we have a base, we have a drop, and there's a significant drop from here. Okay, price has failed to reach this particular zone. Okay, then just hold on. Then okay, first attempt, there has been several attempts. Okay, there has been several attempts to touch it and still failed. Okay, it still failed to reach that particular zone on several attempts. Okay, so this would have been a missed trade. Okay, just trying to look for trade above this area, it failed. Okay, so this is how I would have done it. I would have looked for the candle that has failed to be touched on several occasions, and then look for a trade around that zone. Okay, so the next one is USD JPY. Okay, well, okay, so USD JPY on the 4-hour chart. Okay, so this is what we have. We have, this hasn't been realized yet, it's something I'm looking at. We have demand zone here. Okay, demand zone that has been engulfed. Okay, price gave us a first attempt to reach it. Yes, we had a strong move, and now price has come back to it. Okay, so with this, my expectation is to see price move to the upside. Okay, so for instance, I'll be looking for something like this around here. The stop loss is very wide, so you need to trade it from the lower time frame. Okay, and then I want to see price trade above this liquidity pool. Okay, so you have equal highs here. Okay, you have equal highs here, so you want to see price trade above all this. Okay, so maybe go to the lower time frame. Okay, we go to the lower time frame. Now you can be looking for momentum break. Okay, momentum break of structure because of this trend line. Okay, the break in the momentum trend line. Okay, and then or a break in market structure on this particular time frame, so that we can reduce our risks. Okay, so if you see price trading above this line, then we can take the trade and then hold till we get to that point. Okay, thank you very much, guys.